Hey guys, welcome back. In today's video, we are talking about how AMC are now attacking the shorts, why AMC will be the most valuable, shorts being tiered apart, and many more in this video. First, we take a look at this. In just the first day, we received consent from more than 80% of AMC's term loan lenders to yesterday's big news that AMC reached a collaborative agreement with other AMC lenders to raise $223 million of new financing and the immediate conversion of $143 million of debt to equity. We needed consent from only 50%, so now these transactions can and will proceed. This is a tremendous step towards for AMC, as it's an undeniable vote of confidence from our lenders in the viability of AMC's future success. So yesterday we covered more details about why this is obviously good. We're going to go briefly into this, but you can understand that AMC raising $223 million in cash by offering new bonds that are due way in the future. They took that $223 million to negotiate a refinance of 2026 debt, which had high interest payments. The high interest payment is what was not making AMC profitable. Getting rid of high interest debt is an offensive move in the right direction to being profitable when movie revenue comes in, instead of that revenue going to pay off high interest on 2026 bonds. So you can understand why this is very, very big for AMC and why we talked about this is massive news, because right now what we are going to be seeing is how AMC is going down the route everyone has imagined. And once again, some of the biggest things that we've talked about is the potential of dividends. And so with what was being, stopping AMC from being profitable and going to that profitability, we are now reducing it. We're now cutting that down. And so what we are seeing is how the possibility of AMC going profitable in terms of a way quicker time is now slowly approaching us. And so these are all very good things, because by AMC going profitable, by AMC having the healthy cash flow, we talked about the possibility of a dividend. And so that itself should be taken into consideration when you just really factor in how good this is. Once again, dividend isn't the only thing. It's just one of the factors that I'm highlighting, because it has brought in multiple other ways why financially that this is good for AMC. But another thing, and Adam Aaron also talked about this, is that you got to think about it. Creditors took debt for equity with possibly more future shares for debt because they see AMC as deep value. The shares will earn them more money than just the principal and interest being returned. And so going back to what we saw Adam Aaron obviously put out, you can see that this is a tremendous step forward for AMC as an undeniable vote of confidence from our lenders in the viabilities of AMC's future success. So this gives us multiple different messages. Now, firstly, it's understood that again, if they didn't think AMC was going to be, more profitable and more priced in the future in terms of the share price, they wouldn't be doing this. If they think that AMC will be bankrupt and that their company will, be delisted, they won't do any of the things that they are doing now. They will just take cash on hand. They wouldn't convert it in from debt into equity. The very fact we see more than 80%, you can obviously understand just how much potential people see in AMC. And so when you look at all of these articles that are saying, once again, AMC is a bad company, they should sell AMC, take a look at what people are actually doing. Lenders are willing to convert debt into equity. Institutions are accumulating AMC as much as possible. And so all of these are just really showing why AMC is a good company. Now, if you want this again more summed up, debt reduced, more future money secured, credit improving, regular revenue streaming recovering, new revenue streams exploding, growth to core business. This has become a compounding growth company. You're about 18 months away from AMC being the most envied company in the world. But essentially what this is, and again, we've talked about this, is just how AMC has just put themselves in a very, very good position. I definitely expect AMC to obviously explode in the near future. And we've talked about how this is not only going to let us see real price discovery of AMC, which by the way, is already going to, 100x, 200x where AMC should be right now, but also leading towards that squeeze, which will 1000x, 10,000x where AMC is right now. And so that's what we talked about with just how much potential there is with AMC and with what they have been doing. This is just one of the many things that AMC has done. And again, the articles that we talked about in terms of, you know, why we are seeing AMC being manipulated, you can see AMC ain't a $2 stock. Some examples right here, factual examples right here. And what we're looking at is, firstly, you can see, and we covered this yesterday as well, John Hampton, one of the short sellers of AMC. And you can see what he talked about in terms of, I, for one, would like to thank other AMC shorts for the generous participation in this morning's ladder attack. But this is what we talked about with understanding how you know that shorts are, of course, all combining together in order to push and bring AMC down. But again, why would they be doing this if, you know, they aren't trapped? Why would they be doing this when there's so little value to be gained from this? And you can see these articles, AMC stock loses even when it wins. And this is an article that you're going to see some similar titles almost every single year, almost every single month, in fact. We'll cover it again as well. But this is what we talked about with how they're constantly trying to push AMC down. 5 years later, and all of the haters slash shills and shorts are still with us. Sounds like they are trapped in with us. So going back to what we talked about here in terms of John Hampton, he's someone who's been a short seller of AMC and being very, very vocal. And we've seen this. Now, he has been vocal about AMC for a few years right now. And so the question to be asked here is, if you're a short seller of AMC, how comes you're still shorting the same stock over and over again? How comes you're still talking about the same short position? We don't see him talking about his other positions that he has. We don't see him talking about other short positions, especially that he has. And especially, we don't see him talking about the same position over and over and over again for, you know, multiple years. And so the only possible conclusion we can get from this is that they are still trapped in with us. And so when we understand this, when we understand where they are at, you know, this is how we know that they're trapped. And this is why we talked about with, by AMC doing what they're doing right now, why we are going to be seeing AMC 200x, why we're going to be seeing AMC 2000x, because there's just so much money that is involved in this that the shorts have obviously trapped themselves with. And once they all have to pay up, you can only imagine just how high AMC will go. Another thing you can see, just in Ken Griffin's Citadel is being outperformed by smaller hedge funds in 2025. At one point, Griffin said they had to tear apart and re-examine the portfolio. So this is what we've understood with where funds are going right now in terms about how they are not performing. Now, the reason why they're not performing and why they're being outperformed is because they participated in very, very toxic positions. If they didn't put themselves stuck in AMC and GME, you know, with the countless amount of shorts and swaps that they have, I imagine we won't be seeing an article like this where they're being outperformed. But when you have to, you know, pay millions, hundreds of millions of dollars to finance short positions, when you've sunk in billions of dollars in AMC shorts, in AMC synthetics, in AMC swaps, you know, it's bound to be that you won't perform the way you have. And the fact that they had to tear apart and re-examine the portfolio, well, the very simple answer is get rid of the short positions, but you can't because it will bankrupt you. Another thing you can see, looks like Dougie is in trouble. Another AMC short seller, where we're looking at Virtue Financial, how they were down post-market at one point 21%. And so once again, you can see the comparisons between shorts and AMC. Yes, they're manipulating shorts. Yes, they're suppressing the price of in terms of AMC. They're doing it through shorts. They're doing it through FTDs. They're manipulating the price so we don't go up. But when you see how these short sellers are going down, and you see how they're performing actually, then you realize that AMC is in a very good position. Yes, on the charts, we may not have the ability to move it where we want, unlike these short sellers, but fundamentally, we are better than these short sellers, especially like we talked about with how the box office is doing. Now, I, for one, today watched the new Jurassic movie, and I did enjoy it, and I'm sure countless other people will also enjoy it as well. And this is just one of the many movies that is been released and will also be released in the future as well, that's going to attract so much attention. And so when you combine all of these together, you just know that AMC is going to be on the right path. They're going to be doing a lot more, and they're going to be doing a lot better, especially with everything we just talked about at the start of the video with the refinancing. And then you talk about another thing. What banks needed the Fed to inject 11 billion repo in repo liquidity Monday? And why did the Fed initially only disclose the 6 billion and not the full 11 billion dollars? So stocks at record high, but banks secretly struggling. So this is what we're talking about. We're seeing how Citadel is struggling. We're seeing how Virtue is struggling. And now we're seeing how these banks are also struggling as well. And bear in mind, the reason why these banks are struggling is likely because they've lent out so much money to short sellers who have exposed themselves to so much risk that they can't actually get it back, and that they need this liquidity injection. And so once again, when you compare AMC and all of these other institutions that are out there that are going against AMC, you can see who's doing better and who's not. But yeah, guys, thanks for watching this video. I'll catch you guys next time.